Welcome back to Tip Tuesday. I'm Heather Walraven, one of the partners here at Retire Path Advisors. And today I want to talk to you a little bit about IRMAA. If you have not heard of IRMAA before, you're not alone. IRMAA stands for Income Related Monthly Adjustment Amount. It is basically a surcharge assessed to your Medicare Part B and Part D premiums based on your income. We're going to take a look at this chart. The first line on the chart is really the standard premium for Medicare Part B. We actually have 2023 premium figures. Those were just released a couple of weeks ago. The good news is the premiums actually are decreasing for 2023. But if you look at this chart, you can see that the standard premium for Medicare Part B is going to be $164.90 per month. And that's assuming that if you're a single tax filer or married filing separately, that your income is $97,000 or less. And if you're a joint tax filer, that your modified adjusted gross income is under $194,000. You can see there are 5 other tiers in the IRMAA surcharge world, and those are all based on different levels of income. So if my husband and I are joint tax filers and our income exceeds the $194,000, we would be assessed a Medicare surcharge known as IRMAA. And for 2023, that level would be at $65.90 per month, making our monthly Medicare premium $230.80. And there's 5 different levels of IRMAA, and they range anywhere from $65.90 per month additional to $395.60 a month additional. And then there's another chart for what happens with your Part D premiums. Utilizes the same brackets and just a little bit different premiums there. So that first IRMAA level is actually $12.20 additional to your Part D premiums. A couple of things to note here is that for 2023 premiums, they're actually looking at your 2021 income tax return. This is because it's the most recent data they have on file for you. And the other thing to note is that they're using modified adjusted gross income, which is not a line item on your tax return. You actually have to take your adjusted gross income and add back any tax exempt interest. So is there anything you can do about IRMAA? Sometimes there is. Sometimes there are things that put us into IRMAA that when we normally wouldn't be. I can think of a couple of instances where maybe we've gotten an inheritance, maybe we've sold a business, or we sold some farm ground, and that'll bump us up for 1 year. In that case, the good news there is that you only have to pay IRMAA in the year in which you have that higher income. A couple other strategies that we look at as financial advisors is as we get older and closer to age 72, the IRS says we have to take out so much money called a required minimum distribution from our tax qualified accounts. And that can sometimes push us in or out of IRMAA as well. So of course, there are strategies that we can employ sometimes to avoid that or mitigate some of that. And you would have to work with your financial advisor on that. So I hope this information is helpful. Of course, if you need any help or have any questions or would like someone to look at your personal situation, we would love to do that and be a resource for you. Just give our office a call.